stocks that will have a likely impact, an immediate impact of war.
Yes, Shweta. So let's first look at Adani Ports. Adani Ports was among the worst, performers in the Nifty pack. The stock was down about 5% or so, and it is directly impacted because Adani Ports, as Mohit was also saying, owns Haifa Port. And I was reading reports where it suggested that Israel may consider closing or may have already closed Haifa Ports. Now that could be a major dampener for the stock. But at the same time, Haifa Ports only contributes to about 3% of the total cargo volume for Adani Ports. So perhaps the downfall may be limited to the kind of correction that we are seeing today. Other shipping and logistics stocks were also impacted, given that there is uncertainty regarding the fate of IMEEC, which is a Indian Middle East European Economic Corridor. Now there are concerns that it could the plans to launch that IMEC corridor will take a back seat, and as a result we were seeing some correction in the shipping and logistics company stock. Now, as we were talking about earlier in the show, that crude prices have seen a spike. The companies that are in the business of exploration and production of oil, such as ONGC and Oil India, surged today. Now they were ONGC was up about 0.41%, whereas Oil India gained about 0.53%. Now these companies, for them oil is the final product. So whenever the oil prices go up, their profitability improves and their margins also improve. So that's why we are seeing an uptick in those stocks. On the other side, downstream companies such as Indian Oil, Bharat Petroleum or Hindustan Petroleum saw some profit booking today. Indian Oil was down about 2.5%. Bharat Petroleum was also down about 2%. Now this is because crude is a raw material for these companies. They refine crude to make finished goods. So if the input costs go up, the profitability is also impacted. And as we see that these companies, OMC oil marketing companies, have not been able to transfer that cost to the consumers. The price of both diesel and fuel has been has remained relatively stable in the course of the last 6-7 months. So any uptick in the input cost is a dampener for these stocks, and as a result we are seeing some correction over there. Now Asian Paints, Berger Paints, these are representative of the overall paint stocks which saw a correction today. Now paint, crude is a essential raw material for these paint companies. It accounts to about 30 to 35% of the entire inputs. So any surge in crude prices is negative for paint stocks. Also, this was the reason why some of the tire manufacturers also collapsed. As you can see, MRF and CEAT saw decent bit of correction. CEAT especially was down about 2.36%. The reason again being that crude derivatives are essential raw materials for these tire companies, and as a result we are seeing this sort of a correction.
All right, Mohit, from what we are looking at, all stocks related to oil are under pressure this afternoon. Does this mean that the markets are in fact anticipating crude to hit an all-time high, breach that $97 mark? If yes, this would wreak havoc not just for oil manufacturing companies, or rather OMCs and tire companies and all the other stocks. They could remain in news, in action for a while. Mohit, you are on mute.
Oh, I'm sorry. Yeah. So I was just saying, one of the key reasons why few of these stocks haven't done exceedingly well in this rally is all because of oil. Look, oil has continuously been on the boil for last year or so. Since in fact the Russia-Ukraine conflict, oil has been at a relatively higher level than what it has been historically, right? Now, the thing is, markets are always lead indicators, and markets will always factor in the risk first and the rewards later. So market has already factored in a price escalation in the oil. Oil has already gone up by around 4-5%. Brent has already touched $90. Will it go beyond 9500? That will all depend on the conflict and the duration of the conflict, and how far the conflict actually escalates, right? Otherwise, I think oil remains in this range, but even this range there's a fairly steep range for at least the paint companies, the airline companies, the tire companies. Oil, as you rightly said, Suyash, is a key input material, right, which goes into raw materials or which goes directly into production. So all these companies will continue to remain under pressure for a fairly long bit. My sense is this situation won't ease off immediately, even if the scale of the war reduces, but the situation won't de-escalate, as it was very clear from what the Israeli side spoke yesterday, that be ready for a long war. That was the statement which came out, right? So my sense is this will go fairly long, honestly, and I think oil will continue to remain hot for next 2 3 odd months. Whether it crosses 100 or not is a different matter. If it
Right.
does, then yes, these stocks will be extremely under pressure, and my sense is investors should just stay away from these stocks as of now.
All right, looks like
And
investors are spooked at the moment. Oil marketing companies also trying to factor in what could be a larger impact of high oil prices in days and months to come.
yes, Mohit, before we let you go, I just want to get your view specifically on Adani Ports, a kind of correction that we saw today, 5% drawdown in the stock prices on reports that Haifa Port may be or could be shut down in the near term. What would your advice be to investors? Should they wait on the sideline, given that the concerns are still there, and if the port is in fact closed, it could be a major dampener for Adani Ports?
Look, honestly, Suyash, I think the Haifa port is more towards the Lebanon and Syria side. If you see the ports across the the Israeli coastline, Haifa is the last port and is the farthest away from the Hamas region, or right. So my sense is that port is still quite safe from the war zone, typically, which is right now, unless the war front opens from the Lebanon side and the Syrian side also, which can't be ruled out. Honestly, I think the Lebanon side has also started boiling a little bit, as I read in the newspapers. But my sense is that is still farthest away. Plus, the contribution of Haifa to overall Adani is only, I think, 2%, which or 3% maybe, which has just come out. Right. So my sense is it shouldn't be impacting the overall stock that much. But yes, the sentiment is sentiment, and I think not just Adani Port, but even the new listing, the JSW Infra was down. The ports stock was down almost 5%, which doesn't have any linkage to that region specifically. But even that stock was hammered badly. So my sense is just the market and the sentiment, which tends to react a bit sharper in these cases.
All right, Mohit, we'll get you back as soon as we can. This is a big story that we continue to track all details, of course, here on News9. Thank you so much for taking time out.